Welcome to the B.F. Anderson Technical Report for January 20th. It's been a tough couple of weeks here. As we can see here with the Nasdaq, we continue to see the rollover. Actually, yesterday was quite difficult, breaking to a fresh low. Actually, this morning, and I'm recording this on Wednesday, we are somewhat breaking to another fresh low. We're below the 200-day moving average. The Nasdaq needs to do some work. Now you can see here on the 35-week moving average, we have broken it for the first time in a long time. Now remember, the rule here is we need to go 2 weeks below the 35-week, along with the S&P confirming. Now on the mid-cap stock, same picture here. We're seeing a break below the 200-day moving average. Mid-cap stocks are not doing as well. New York Composite holding up a little better. We're holding above the 200-day. However, still looking like it needs to break out this way, but it's somewhat breaking this way. Continues to look difficult. Small cap, same thing. We broke below the 200-day, making a fresh low. Continues to stay in a downtrend. S&P 500, again, holding up the best along with the New York Composite, holding above the 200-day, actually holding above the 35-week, so we need to watch this carefully. Now, on the yield curve, which I'm comparing the 3-month Treasury to the 5-year note, you can really see it's almost what's going on here is the interest rates are jumping quite dramatically. Now, I do not claim to be a yield curve expert. I'm learning as much as I can about it. But it's basically saying that the longer-term bonds are going up faster than the shorter-term bonds, which to me would be inflation fears. Now, on the aggression index, this is not a pretty picture. We broke below the 40-week moving average. Now we've got the 10-week breaking below the 40-week. This is in a definite downtrend. This basically means that growth stocks are underperforming, primarily technology. Now, on our 3 economic indicators, you can see here where interest rates have popped up. Price of oil, it's knocking on $85 a barrel, and we could see $100 oil. We don't know. We don't want to predict, but the trend is definitely up in oil prices. Along with the financials kind of have backed off a little bit. We were getting a lot of earnings reports on the banks, some favorable, some not. New lows, again, getting too high. We're up to 300 almost. This is not a good sign when we get new lows hitting such a high level. Now, the only good news here is that we're starting to see a lot of fear coming into this AAII bull-bear ratio. We're getting down here into fear, so, we can go lower, but it's also saying that, this is a contrary indicator, and so when we start to see a lot of fear, it's kind of setting up for a bottom. Now, here's the put-call ratio. We continue to stay in this somewhat neutral zone here, leaning towards greed. Really would like to see that spike up into here. That way, hopefully, we're going to put a bottom in here. Now, this indicator here I think is very important. This is the percent of stocks above their 200-day moving average on the Nasdaq. Now, I've told you in the past that a break below 25, most times you go lower. So, this could be we could see a V bottom here, which would be somewhat of a good sign for a bottoming process. If we look at the same indicator using the New York Stock Exchange, it's not as bad. We're at 50%, but again, it's in a downtrend. So the 200-day moving average is a very important moving average, and over 75% of the stocks on the Nasdaq are below the 200-day, which is just not a good number. Now, here is the junk bond ratio we keep an eye on. You can see junk bonds are holding up. Now, a lot of that could be money coming out of the equity market going into junk bonds. Who knows? But we are seeing an improvement in this ratio. Now, on the volatility index, I did want to mention this. If you take the 10-day rate of change, and if that gets above 50%, that's just not a very good sign. And, right now we're about, 23, 24%. So, volatility is picking up. I just wanted to show you here on crude oil. We've been somewhat in a downtrend, consolidating, really dropped off during the virus scare. Now we're starting to break out. We've broken this resistance here. We're in an uptrend. You can see $85. The price of oil does look like it could go higher. Now, on the top five, here is ZIM Integrated Shipping Services. This is a shipping company, kind of a unique situation. The pattern's favorable. I mean, it's holding above the 10-day moving average in a very nice positive uptrend. Here's Tech Resources. Now, this is a metals company, and we're starting to see these are like inflation type stocks. I mean, we're seeing the metal stocks kind of picking up steam here. Here we have Marathon Oil. Oil stocks continue to look strong, continue to be in an uptrend. We do own some oil stocks, and we'll just have to see. Like Devon, we do own Devon, a very good company operating out of the Permian Basin. Very, very profitable company. We're seeing a lot of good cash flows in these oil stocks. Ford Motor Company kind of breaking down on us here. This is somewhat of a violation. It's breaking below the 10-day moving average. Pretty much needs to hold. We had a gap up here. We'd really need to hold the lower portion of this gap. So if you have any questions, please give me a call. Thank you very much.